As Mark Twain said back in 1874, history doesn't repeat itself, but it rhymes. As Uncle Sam rescued two big-to-fail banks 15 years ago, this time around, some banks that are in trouble are getting bailed out in various flavors, where others, no significant banks, are being let to go under. In this liquidity crisis that began with the collapse of Silvergate Bank, more banks followed, but with different reactions from the banking community and Uncle Sam. This highlights the fact that Silvergate Bank was not big enough of importance. Its coziness to the crypto community also has no doubt played a role in its liquidation following FTX bankruptcy. On the other hand, SVB, which sparked a bank run by the attempt to raise capital soon after it became apparent that they were going to run out of cash in short time, J. Powell stepped in for help. Signature Bank, that had bit similar experience when FDIC decided that most of the deposits assets were non-insurable or junk assets, obviously due to they having crypto on their books as deposits assets. At the same time, FDIC decided to safeguard Signature Bank's survival. Now here we go again. First Republic Bank, the 23rd largest bank in the US, founded in 1985, they are headquartered in San Francisco. Another thing they have in common with SVB is that they are a commercial bank and offer services to high net worth individuals. Having its assets tied up in long-dated bonds, paying low interest, the same as SVB, by the way. In this inflation period where the rates are going up and up and up, this caused First Republic Bank needs to raise capital, yet again causing another bank run. First Republic Bank, having over 100 billion under asset management, this offered them a place in too big to fail club. The titans of today's financial world, Janet Yellen of US Treasury, Jay Powell of US Federal Reserve, and Jamie Dimon of JP Morgan, got together to organize First Republic Bank Rescue that would send a message to the bank depositors of their confidence in the banking system. The rescue package to First Republic Bank is $30 billion from 11 different banks. There is no doubt in my mind that this is a loan with strings attached. For example, they will have to pay high interest too, as those third-party banks have an option to earn high interest on short duration elsewhere. With all being said, the general public doesn't need to panic over what is going on in the banking world. There are safeguards in place to prevent the liquidity crisis spilling over to the public. One guardrail is deposit insurance, which I will cover in more detail in the near future.